Welcome, everybody, to Secret Sauce, the show where we unpack business tips, life hacks, and advice from industry leaders. I'm Karly.iacono. Today, I am very pleased to be joined by Jared Morgan, the head of acquisitions at Four Springs Capital Trust. Jared, thank you so much for your time today. Why don't you kick it off by giving us a little bit of background on yourself and your role at Four Springs?
Sure. Thanks, Carly. Appreciate having me on. So Jared Morgan, I head up acquisitions for Four Springs. As Carly noted, we are a private REIT. Myself, I've been in commercial real estate for 28 years now. I've been in the net lease sector, single tenant net lease sector for 17 years. Been working in both private and public sectors of the space. I've done over $5 billion of net lease product that I've bought and sold, both portfolio and individual assets throughout the years. Our company, we started in 2012. Right now, we're about $1.2 billion of assets under management. We're a diversified REIT. So by diversified, we like a lot of different food groups in real estate. We're 40% industrial, we're 30% retail, and 30% medical. So a nice healthy balance of different tenants. We're 32% investment grade. The balance is private credits that don't have a credit rating on them. We're 100% occupied. We were even through COVID, and we have about 53 unique tenants in 29 states. So a well-diversified portfolio located throughout the United States.
Amazing breadth of experience. And given your role, I would imagine you see a wide diversity of deals as well.
Yeah, we've got a deep pipeline. We always tell people on a trailing 12-month basis, we're usually looking at about 20 billion of opportunities that fit our box, our space. Right. And on that, we're probably bidding on around 1 billion of that and ultimately closing on less than 1%. So we look at a lot of different deals in a lot of different places.
And that is exactly why I wanted to have you on the show, aside from just being a friend and someone well-respected in the industry. This market cross-section, I think, can really lend insight into where we are in the market cycle, where you think things are going. So I would love to hear your perspective on sort of what's happening, right? Are we in panic mode like some people are? Are we cruising along? Like, what is your perspective on where we are in the market?
Yeah, it is, as we speak today, it is the craziest of times, I think, in this cycle, really, for the past 12, 18 months. And I don't know where we're going to be in a couple months. I do think that a lot of people are pausing, pencils down. They're going to enjoy the summer, which is not a bad thing. And then that September rush back to the office and requirement back into the office is going to make people kind of really start addressing what's happening out there. But where we are right now, and I see things through this net lease microscope that I live in. So that's how I live and breathe and see real estate. Debt markets are non-existent right now. Lenders, they are not lending. They're not submitting term sheets. It's really on a pause. It will come back, but it's going to come back with much higher rates, much different terms. So deal flow is a little bit of a standstill. Some stuff got finished up past month or two that were really first quarter kind of legacy type deals. There's still a lot of exchange money that's got to be placed, and that's really the deal activity right now is within the exchange market. But the main players, both public, private, the funds, all the different players out there, we're recalibrating. We're trying to understand the cost of money and how that impacts what we should pay for things and where we put them and where the buckets are. So it's very interesting right now. There are a lot of great opportunities that are starting to come to the market. If you have the availability to go out and buy, and you feel comfortable where you can park that asset and the yield you can get it at, I think it's a great time, and I think it will be for the next 6 to 12 months to buy assets creatively. But there is a lot of noise, a lot of confusion that creates opportunity, but a lot of concerns about what direction we're going.
So I got 2 takeaways from that. One, I need to plan more beach vacations this summer because I am apparently the only one not traveling and taking the summer off. No, I'm teasing. And then 2, on the financing perspective, more of a follow-up question. Are you just unhappy with the terms that you're getting on deals from lenders, or are lenders pulling back and they're on a pause? Two different scenarios, right?
Yeah, well,
or both.
you can never be happy about the terms now, right? I mean, you had
Right.
rates last year at 1.4%, the 10-year treasury. Today, that's, hit a high last week of 3.3%. That is a pretty drastic increase off your base
Right.
rate that spreads are being priced at. So, the terms are tough, but they are what they are, right? The market's efficient. You bid accordingly, and you know ultimately where you want to have an asset kind of land in your portfolio. The problem is, even though we're stomaching the increase in rates, we're not getting the term sheets and we're not getting commitment to those rates. So if you got a transaction, and in my world, it's about a 30 to 60 day cycle from the day that you win a deal to you close it and you park it in your vehicle, whatever that might be. You need to know that that's going to be there at the closing table. We're having trouble actually getting that commitment from lenders to say that, this is the rate, whether you like it or not, but you can underwrite it and it'll be there at close. That's the struggle right now. And I think it's starting to loosen up a little. Last week was a hectic week. And I think it caused a lot of lenders to pause, but those lenders are very cash rich and need to get money out in the market. So they'll be back out, and we'll start getting deals done again, and things will be repriced accordingly with the interest rates we're going to get on the transactions we're bidding. So, it's not a matter of we don't like the terms anymore. It's a matter of there are no terms right now with a market that's dried up and a CMBS market that's kind of non-existent. So we need that to start coming back into play so we know how to price things and where to go back to the market.
And I think you made an interesting distinction right at the end there, that CMBS, right, versus traditional bank debt versus some other alternative lenders. Like, there are groups of lenders that are active, but not maybe the ones that are a perfect match for your types of deals you're pursuing. So it's also somewhat deal type specific.
It is. And on a project level, our best conversations recently have been with relationship banks. And I hear that from all my peers. They're going back to people they know and on very selective deals, they're starting to have conversations. And then regional banks, maybe where the asset is located. And we buy across the country. So we might be in Texas, California, and Michigan. We're talking to regional lenders, and we're starting to get some traction there. So, that is where we've been successful. And it's not in the past year, the past 6 months, it's in the past week.
The last 2 weeks. Yeah.
It is
exactly,
a daily activity, and it's changing
Crazy.
rapidly.
You're so right. I want to circle back to something positive that you said, that you do still feel that the next 6 to 12 months are a good time to buy if people can find the right opportunity. So what makes you feel that it's a good time to buy?
Well, it's whenever you have panic, you have stress on the market. It's a time to recalibrate and find out where opportunity is. And in our space, I think there are a lot of people on the sidelines, which is okay. If you can be patient, you can be smart, understand that. But you have deals and transactions that need to be done. We do a lot in the sale-leaseback space where we're helping generate capital for businesses through the real estate. And their market has dried up as well. So they're looking to their real estate to kind of create liquidity. I see opportunities there. If you have the dry powder and you are more selective, you can find very quality transactions in this market. And so we're starting to see a lot of that. And with some peers, pencils down, you can step in and be the successful party to win that. So I think a lot of competition is kind of off the table right now. Which is good for what was really an overheated market. And because of that, as people are trying to figure out the next step, you can selectively go and find quality transactions in this space.
I agree. I think times of extreme volatility are when market share is solidified, right? When it's increased for people who are remaining active and thoughtful in what they're pursuing. I think it can be a huge opportunity, actually. Thank you for sharing that insight into the market. I appreciate it. Before we wrap up, is there a personal tip or life hack that you'd like to share as well?
Yeah, I always stress to people and people that work with me, work for me, we're in this crazy world of negotiating and structuring deals. And now you put on top of this, we had COVID, now you have this recession coming. I really stress to stay true to your word. Reputation, honesty matters so much, just not in our space, but in, any industry that you're in. There's a misconception about real estate for people that it's this gritty business where we're in the trenches, rolling the sleeves up and fighting over transactions for survival. Well, it's not how I function. In actuality, it's a very efficient marketplace that I operate in. There's a lot of information, abundance of information for me to make smart decisions. And I put a lot of time in up front to a transaction to understand the concerns, the issues, so that by the time we shake hands on a deal, we're moving forward with it. And I stress that to people: do the work up front. There's no need to go back and haggle and fight in our space. You build strong relationships by doing quality transactions, and that leads to more deals. And those are the best clients, the best partners I've had, is meeting them at the closing table, shaking hands, saying, let's do that again. So that's something that's really helped me and has helped me kind of grow my career. And then also just stress to people: be organized, and keep hold of your experience and information that you have on transactions. And you do that really through your database, through contacts. I just hired an intern from South Carolina that was asking me for advice, and if a sophomore in college, what can I do now to really help my career? And I was thinking, I was like, you know what, you should create a database, if you don't have it already, of everyone you talk to, and notes associated with that, because you might find that person 5 years down the road, look back at that conversation, and there's going to be value there. So really stressed how important it is to track that information. And as I get older and the memory starts to go more, I have that data there. I can go back and say, oh, I remember we did something together 3 years ago. It's so important to track that and put the time in to have that database, Outlook or some other CRM, create that and really carry that with you throughout your career.
Such a missed opportunity if you don't do that. But can you imagine if you were thoughtful at the very beginning of your career, from the intern stage, and recorded all the people you knew and kept in touch with them? How many people we both would know by this point in our careers? I mean, we both know it.
Yep.
Seems like an endless number of people, but just if we had started then with that much intention, what that would lead to today. That's a fantastic tip. And really, to tie it back into your other advice, that's when your reputation starts, right? You can start building that presence and that reputation and that thoughtfulness in your career all the way at the intern stage. I love that. Very nice. I wish all clients operated like you and Four Springs do. You're always a pleasure to work with, and I appreciate your professionalism and organization very much as well. So I can say to everyone listening that this is not just advice, but a life motto and the way your whole company operates. So thank you for that.
Great. I appreciate that.
All right. This has been a lot of fun. Really grateful for your time today. To everyone watching, that was Secret Sauce. I'm Karly Iacono. We hope to see you again very soon. Thank you so much, Jared. Take care.
Thank you very much.